Can you see the screen?
It's about to cut, Shubhajit. Yeah, now I can able to see.
Okay, you can see now, no?
Yeah.
Okay, so let us calculate the whole thing in terms of one company. We had already done one of the methods. Let us try both methods together. Doesn't matter one person is there or not, because as long as the meeting is being recorded and I send the everything on the group, everybody can benefit. Whoever wants to look at
Yeah, that makes sense.
it. This is being recorded anyway.
Yes.
Okay, so I'll remember what we did last time. Which company we did?
Today we are at
Remember the company name?
NBCC, I think. NBCC. NBCC.
NBCC. Okay.
Yes, 9 serial number 9.
So we had done the dividend
But yes.
but I'll still show you the whole step.
Yeah, please. Because I'm sorry, you know that I didn't focus on the calculations last time.
Okay, I'll show you again.
Yeah. So expected dividend per share. So I think we have calculation for this.
Because WACC itself has three options in which we have to calculate WACC. Because only once we have WACC, we can calculate both these formulas. So let us calculate WACC first, because that is the weighted average cost of capital. Okay. We need to know the weighted average cost of capital.
Yeah.
Okay. So kindly note down these inputs.
Okay.
Market cap is 2898.
Market cap
is 2898.
Okay.
Debt is 0.
Okay.
So what is market cap plus total debt? Should be 2898 only.
It's same 289. Yes.
So the formula for WACC is cost of debt into debt by uh, total assets, which is equal to equity plus total debt. So that means wait, I'll put the thing in the chat box. It is cost of interest, cost of equity into equity by debt plus this debt plus equity. So denominator is debt plus equity.
So cost of equity into equity divided by debt plus equity, right?
Yes. Plus cost of debt into debt divided by debt plus equity. So WACC is debt so cost of equity into remember hello.
Yeah. Cost
So in
divided by debt plus equity.
this case yeah, in this case the second part will be zero because debt is zero. Okay, in this case it is easy
Yes, yes.
because if debt is zero, the whole second term becomes zero because zero divided by anything is zero and zero into something is also zero.
Zero,
So
yeah.
entire second equation is not there. So this part becomes easy. Let us find out how to calculate cost of equity. Okay.
Uh,
Okay. Note down this, Rakesh.
formula. Yeah, yeah.
Note down this formula.
Sure.
How
Once
how
again,
much we want? How much we want for growth in dividends? We want minimum 10%. 10%
yes,
growth we
yes.
require in dividend because and what was the dividend per share? Dividend per share is given. We had calculated dividend per share. Remember, from dividend
Per
yield
share.
we calculated dividend per share. So 4.04% is equal to X divided by net profit or earnings per share. So earnings per share is how much? 7 point.
Yes, earning per share.
One second. We are doing cost. So dividend per share.
Right.
Dividend per share is equal to. Let's break down step by step.
Yeah,
Because this is something very complicated. We need to calculate all the inputs before we get the thing properly. But once the first time it seems difficult, but later it will be very easy. Okay. Okay. So now
per share formula.
I'm finding out the cost. I'm finding out the cost of equity. Okay. So I'm trying to find out
Yes.
dividend per share. Yeah. I'm firstly trying to find out dividend per share. So dividend per share is equal to uh, earnings per share into dividend
Into dividend ratio. Okay.
Yeah. So what is earnings per share? That is price by earnings into
EPS is equal to
or
price.
divided by price.
Price.
Stock P. So PE divided by P will give us what? E divided by P will give us 1 by E. Remember? Or PE divided by P will give us what? First we need to find out earnings per share. Earnings per share. So PE ratio is what? PE ratio is price by earnings per share. Okay. So
Yeah.
we have PE ratio. So PE ratio is 20.45. That is equal to price 16.10. Price earning ratio. No, 16.10 is the price and divided by earnings per share. Okay. Now earnings per share is equal to it goes reverse direction. 16.10 divided by 20.45. Now calculate this, how much it is. What is earnings per share?
16.1 divided by 20.45, 0.77.
0.787. Okay. Say 0.779. Okay. And what is dividend yield? Dividend yield formula. Dividend yield formula. Okay. Dividend yield. Okay. So dividend yield. So dividend yield. dividend yield is dividend per share into divided by earnings per share. Okay. Now dividend yield we know 4.04% is equal to dividend per share we don't know, but we know earnings per share from our last example 0.79. So dividend per share is equal to 0.79 into, remember every step has to be calculated to arrive at proper yield. We are calculating everything step by step. That's why it seems so long. But we have to do this for every company. That will, and ultimately when we arrive at intrinsic value, we have to divide that by half. And if the price is less than half of intrinsic value, then only we buy the share. Otherwise, we don't buy the share.
Yeah.
So all this calculation has to be done for every company. So Rakesh, calculate this 0.79 into 0.0404.
0.0404 into 0.79. It's 0.319.
0.79 into 0.0404, not 0.404. I think you
0.0404 into 0.79. It's a 0.0319. Sorry, 0.0.
That's what I was saying. It won't be so much. So dividend per share is, note this down because this will be useful in our remaining formulas. Okay, now what do we need to calculate? We need to calculate equity. Now we per share. Okay, so 0.032 say 0.032. Okay, 0.032 divided by what they are saying, current market value per share. Current market value per share is how much? 16.10. No, current market value per share. Current market price. So 16.10.
Current price. Is it current price? Is it current price?
Price, yes.
How much is? Yeah. Our cost of equity is equal to
dividend per share. Dividend per share divided by current market value of stock plus our dividend growth rate, which is 0.10. Is equal to how much? 0.032 divided by 16.10 plus 0.10. How much is it?
0.10.
0.10, huh?
Yeah. 0.032 divided by 16.1 into 0.1. No,
not into.
Somewhere.
Plus
0.032
plus 0.1. Not into. This plus.
Plus divided by 16.1 plus 0.1. So it is, yeah.
Tell me what is 0.032 divided by 16.10? How much is that? How much is that?
It's 0.00198.
0.00198. Say 0.002. 0.002. Okay.
Yes, 10.
We are taking approximate 0.002. So
Plus 0.1.
plus 0.1. So how much is it? You add you add 0.100. It will 0.102.
0.102.
Yeah.
Yeah.
So cost of equity is 0.102. Okay, that is equal to your cost of
Yeah.
equity. So now let us go to the um, WACC formula. So cost of equity now we have
Yes.
0.102
Yeah.
into our uh,
Equity. What is
equity
equity?
equity divided by market value of equity divided by debt plus equity, and debt is 0, so no problem. Equity divided by, this is easy because equity divided by equity will become 1 only. Remember,
Okay.
because debt is 0, so we don't need to calculate also because debt is 0. So equity divided by equity will cancel out. It will become 1. So so the whole thing will become
Yes. Yes.
0.102 only.
COE. COE. Yeah. Yeah. Like this.
Same only. Because the other expression is 0 because debt is 0. And this here, because debt is 0, equity divided by equity is also so ultimately we arrive at weighted average cost of capital will be same as equity cost of capital will be 0.102. Okay. Understood?
Yeah.
So now we have WACC.
Yeah. Got it. Got it.
Now we want to calculate. Now we want to calculate what is the dividend discount.
Yeah. Before that, what is
Last
the
time,
equity value in this case? I know it is a right. It will be cancelled, but I want to know the value where we arrived at equity value.
equity value is this one. What is the market value? Market cap 2898. 2898 divided by 2898
Okay. Okay.
plus
Okay.
debt.
This is equity, right?
Yeah. Because debt is 0, so 2898 divided by 2898 will get cancelled out. It will become 1 only.
One. Yeah. Yeah. Yeah.
So now we want to find out dividend discount method. Discount. Discount. Remember we did this last time. So let us now go to. So we are repeating what we did last time, and then we'll again for the this cash flow is again another big calculation. Okay. So let us repeat because last time we just arbitrarily calculated the weighted average cost of capital, but now weighted average cost of capital we have accurately calculated. Is it okay? Hello.
Okay. Yeah. Yeah. Yeah.
Yeah.
Wait.
Yeah. Can you hear me now? Am I audible?
Yeah. Yeah, you're audible, Shubhajit.
Okay, fine. Uh,
Shubhajit, give me 2 minutes. I'm getting a call from office. 1 minute, please.
sure, sure.
Hello? Hi, Shiva. Shubhajit, just dropping one mail. Give me 2 minutes. They need some mail.
Yeah, sure.
They want some report. I'm giving just 2 minutes.
Okay.
Thank you.
Yeah, okay.
Hello? Yeah, Shubhajit, I'm back.
Yeah. Okay. So now you calculate expected dividend per share 0.032 into 1.1. So what is your expected dividend per 0? Remember we calculated 0.032 from earlier. Now you multiply that by 1.1.
Yeah, it is.
How much is it?
It's a okay. It is a growth rate, right? Growth rates are 10%.
Yeah.
0.
Because we want dividend next year to be growing by 10%.
So 0.0
2 0.032 into
1.1 0.0
0.0352. Okay. So note down this. Note down the numerator. Then. So 0.0352 is your numerator. Your R is your weighted average cost of capital. So R is your
Okay. Shwin, I'm sorry. What is the main formula? Just what are the main formula?
main formula is next expected dividend per share. WACC minus in the denominator only there will be a bracket minus growth rate. Expected dividend per share in turn is dividend per share into current dividend per share into growth rate. So expected dividend per share is 0. Yeah. I want minimum 10% on the dividend to go next year. Otherwise, why should I take all that risk? And 0. What we calculated is 0.102. Remember? 0.102. We calculated.
Yeah.
And from that we subtract 0.1. So 0.100 we subtract. How much you get?
Yeah.
0.035.
0.002.
So divided by 0.002. Now you calculate intrinsic value per share is how much?
Zero point zero three
52
0.0352 divided by 0.002.
0.00.
17.6.
17.6. 17.6. Okay. Now you need to your current price should be half of this. Current price is your margin of safety current price. Margin of safety current price, because once we have the intrinsic value, we are done. We have calculated, we have got the actual indicator whether we should purchase the company or not. 0.5 into 17.6 is how much? How much is it?
8.8. 8.8.
8.8. Okay. So is the price less than 8.8? No, it is not. It is 16.1. It is much more than 8. So we do not invest in this company at this particular point.
So what is the scenario? Invoice should be more than current price, right?
It should be half of the price.
Current price should be more than current price.
Half of intrinsic value, not the current price. Half of intrinsic value. which we calculated after all the difficulty. We finally calculated intrinsic value.
Yeah,
It should be half of that. We calculated intrinsic value to be 17.6. So current price of margin of safety would be half of that, is equal to 8.8. Is it clear?
it should be equal to. Yeah, it should be is equal to. It's clear. I got 8 point is I okay, but our current price is 16.1.
We don't go by current price, we go by intrinsic value. It should be half of it.
Okay.
So our current price should be less than half of.
Half of intrinsic.
Yes.
Yes, that is yeah, that is what I'm expecting.
But that is not the case in this company. That is not the case in this company. Current price is slightly less than your intrinsic value, but no way it is half of it. This company is not yet safe to invest in by using value investing possibilities.
Yeah.
By this particular criteria, remember there are two criteria which we discussed. By this criteria, it fails. It fails
Yes.
dividend discount model, value investment, value investment. Okay.
Yeah.
Now we go for the second model. Out of that, let us see what we already have. We have earnings before interest and tax.
Yeah. Wait, 1 second, I'm getting call. Hello, Sapna.
Call. Oh, yeah.
Yeah, tell me.
Hello.
Hello?
You're back?
I'm back.
Yeah, okay.
Hello?
So now
Yeah, I'm back long back. You actually.
okay. Now I'm saying that you have now that we have heard the phone. Hello.
Yeah, I'm following you. I'm listening.
Yes. So now we calculate the operating free cash flow. We try to find out the intrinsic value via
FCF. Yeah. Fixed.
yes FCF method, because we have already completed the first method. So what is EBIT? Now let us take what is EBIT. Earnings before interest and tax. And tax rate in India is what was last year's tax rate in India?
Tax rate of what?
What is corporate tax in India? It is 30%, na? Any idea what is corporate tax in India?
Yeah.
Corporate last year, not this year, because this year they brought it down.
What is
Corporate tax rate. What is corporate tax rate? If you get 100 rupees in profit, how much do you need to pay in tax?
It is 35 to 21% Shubhajit.
35 to
21% it is showing.
25%.
In India. $15% is it? 15%.
So 15% is now, but we want to know what it was last year.
Okay.
15%. They reduced the corporate tax rate.
48.3%. 48.3%.
No, that is too high.
Shubhajit.
Let's try to
48.3%.
corporate tax rate.
That is 15%.
No,
In
25%.
India.
No,
In India.
25%. Yes, 25%.
Okay.
25%. Let's see
Yeah, okay.
now.
Okay.
25%. Yes. So now,
What is the formula? Shubhajit, can you please copy paste the formula in our chat box?
yes, okay.
Investopedia. I can do this in Investopedia, right?
It's too big a formula. It's very big.
Yeah.
Wait. Let's still try. copy more here as D into A. Okay, so let us hello Gaganpreet, since you have just joined, Gaganpreet, can you hear me?
Hello, yeah, I can hear you.
Yes, since you have just joined, we are calculating the intrinsic value for a live case study. Okay.
Okay,
So as you can see on the screen, we have this company known as NBCC. We're trying to find out what is the intrinsic value of the company using the method called free cash flow method. We already calculated the intrinsic value by the first part of whatever we did today was to calculate the intrinsic value of the company by uh, dividend discount model method. So that we found out to be 17.6 rupees per share, and the value investing says that we invest only in companies where current price is less than half of the intrinsic value. Since current price is
okay,
16.10 and 17.6 is intrinsic value, it is clearly not half. So in the first criteria, it is failing the margin of safety. That's why
okay,
we want to cross check the company with the second criteria. So now we are calculating the intrinsic value with the second criteria. First
fine.
criteria has already failed. So so now we want to know what is earnings before interest and tax. So we can find that out
Hmm.
in the balance sheet,
Okay,
in the profit and loss account. So earnings before interest and tax. So that is
257.
257. 257. So profit before tax is 349, and we need to add the interest also. So 349 plus 24, but I'm going to have to see the correct year. I have to see 2018. So it would be 584 plus
28.
plus 28. Yes.
Shumit, where you find the figure?
2018.
2018.
Shumit,
March 2018. It is in the year.
for
It is in profit and loss.
profit
Profit and
before
loss.
tax, right?
Profit and loss.
Profit before tax.
Profit before tax is 584. Plus you need to add
You're taking the net profit. Okay.
it will be 584. I'll put the formula over here. 584 is profit before tax.
Plus interest.
Plus you need to add interest. That will be 28. So how much is your EBIT?
Interest 25%, no? 25%.
Earnings before interest and tax.
So it is 612.
It can't be 6.2. 612.
612.
Okay, so EBIT is 612. Now let us calculate the other things which we require. Tax rate is 25%.
Yeah.
So what is, as per formula, what is EBIT? So that also we have. EBIT
EBIT 612.
EBIT into 1 minus tax is equal to, we already have that figure, 584. No, sorry, not 584. No, actually, you need to subtract this from 612. You need to subtract 1 minus 0.25. So it will be 612 into 0.75. Rakesh, kindly calculate.
459.
What we're calculating? What we're calculating?
EBIT into 1 minus tax. I'm going by the formula above. I need to find out the inputs. So I'm going by this formula above.
Okay, now makes sense. Now makes sense. 1 minus T, that is equal to 450.
459.
1 minus 0.25 into 459. Yeah, right.
459. Okay. So that is so far we have calculated this much of the expression. Now we find out what is depreciation. That also we are given over here. Depreciation is 6. See this. Depreciation is 6. So 459. Remember, we are just adding inputs as per the formula. So depreciation is 6.
465.
Yeah, correct. 465 minus capex. Now for capex, we need to go to the balance sheet. Capex we will not get in the. Where do we find capex? We find capex. Not a ratio, it's not a ratio. We need to find out what is capex. So we need to go to the balance sheet.
Company name side, right?
What would you say? Hello?
I not get the ratios because you reached the target, right? You reached the quota.
Yeah.
I'm trying in my screen. I'm not getting it. No, Shubhajit, there is no capex category in screener.
There's no.
No category, capex category in the screener.
But we can calculate that from the balance sheet.
Okay.
I think from fixed assets, right?
Balance
Yes.
sheets.
This the investments will give you capex. No, fixed assets. Let us put the plus. Let us see the difference between fixed assets of the 2 years. Then we'll find out if there is any there has been any difference. So that would be the capex. 182 minus 129 would be the capex.
53.
No, we are calculating 2018, 2018 to 2017. It will be 6 only.
Okay.
Remember, we are calculating 2018 only.
That is depreciation, right?
Depreciation is different. The depreciation is 20.01 minus 7.59. No, we are talking about fixed assets. Whether there has been any increase in fixed assets between the 2 years. That is, any increase in the fixed assets between the 2 years shows your capex.
Okay, fine.
So 129 minus 123 would be 6. So this now D is D we know to be equal to
Sorry, right?
9
Depreciation.
plus 6. I'm saying I can't access the chat panel. The 459 plus 6 minus capex, they said. So minus capex is minus 6.
453.
Then it is the same 459 only.
9 only, yes.
Depreciation times working capital and depreciation times assets. So depreciation times total assets only we require. So accumulated depreciation is how much they are showing? Accumulated depreciation is
20.01.
20.01. So calculate this 459 minus 20.01.
438.99.
So let us take it as 439 only. So 439. Let us take this. Now that is our operating free cash flow. So operating free cash flow is.
I have small doubt here. I have small doubt here.
Yeah. Yes.
While calculating EBIT, no. I got it. Because in EBIT we have taken depreciation as 6, right?
We added 6 because 6 was the interest rate. So 6 was what? 459 plus 6.
Depreciation.
It was depreciation.
EBIT into 1 minus taxation. EBIT into 1 minus taxation came out as 459.
75%.
Yeah. So 459 plus 6 is 465.
Depreciation. And then
capex. Then we remove capex. We remove depreciation.
Yeah.
Here we have 2 depreciation. What I'm trying to tell you is, in second scenario we have taken accumulated depreciation. First scenario we have taken the depreciation. Why? That is the question.
No, second one is balance sheet depreciation, and this one is profit and loss depreciation.
Okay.
So operating free cash flow is 439. Now we try to find out
Working capital.
We have already got this operating free cash flow. Now we calculate something known as growth rate.
Sure,
Growth
here,
rate
give me
is
Shubhajit. Here we came till capex minus depreciation, right? Still we are going to working capital. In the formula, we left this couple of items.
well, because I depreciation for working capital is very less.
Okay, so we are ignored, right?
I ignored that because working capital hardly it will have any impact. The main depreciation comes from the fixed capital.
Okay.
Because depreciation you associate with wear and tear. What wear and tear will your inventory which is regularly flowing? You can't expect them to have much wear and tear, is it?
Okay.
That's why I ignore it.
Okay.
So now we come to the second part of the equation. We calculate growth rate. For growth rate, we need to know what is the retention ratio, and we need to multiply that with return on invested capital. So what is retention ratio is equal to 1 minus dividend payout ratio, dividend yield basically. So that is in this for this company. Remember, for this company, dividend yield is only 4.04%. So retention ratio is equal to 1 minus 0.0404. So how much is it? How much is retention ratio?
0.9596.
Here, eh?
Hello? 0.9596, yes. Correct. Hello? Okay. So 0.9596 is the retention ratio. And what is return on invested capital now? Return on invested capital is EBIT 1 minus tax. We already have this. EBIT 1 minus tax rate.
75%.
We already have divided by total capital. Total capital means total assets. So EBIT 1 minus tax is, we already have that 459, I think. No?
Tax is yes, exactly.
459, huh? 59, yes. So 459 is our EBIT 1 minus tax, and we want to know what is the total assets. So total assets means the entire right side of the equation. So we need to go to the balance sheet. Total assets is for 12,282. See this figure, 12,282. Okay. 12.
037.
How much is it? 0.037.
0.037. 0.037.
0.037. So that is your growth.
Yeah.
So that is your return capital. So we need to multiply both of them. So G is equal to G is equal to 0.036, say, or 0.036 into
459.
other growth rate which we calculated.
9.5 and 6.
Ratio 0.9.
0.95.
0.0358.
0.0358.
Is it?
So G is 0.0358.
0.0355.
Your calculation.
How much you are getting?
0.0355.
So let us say 0.0356 as an average figure. So now we calculate. We have the growth rate. We want a constant growth rate. Okay. Constant growth rate means we have the operating cash flow. So intrinsic value now is what is operating free cash flow? Remember we calculated operating free cash flow. Did we calculate? We didn't calculate. We only calculate the inputs.
0. It is 0. Shubhajit, I'm sorry. Its growth rate is 0.0345.
Where? But 0.0345.
0.0356. Yes, not 56.
Okay.
Like you calculate 0.9596 at the rate like multiplied by 0.037, right?
036.
036. Okay.
036. Yeah. So G is equal to 0.0345.
Fine.
Okay. But we didn't calculate. We calculated all the inputs. We didn't calculate the operating free cash. No, we did calculate operating free cash flow. So operating free cash flow is 439. That's what I was wondering. Without calculating the first step, how I went to the second step. So we did calculate operating cash flow divided. Now, the weighted average cost of capital we have already calculated in our earlier sum. Remember? So that is 0. In the first example,
102.
0.102. So 0.102 is a rate. And what is the growth rate which you just now calculated? 0.0345.
Yes.
So now you calculate the intrinsic value. Firstly,
can you please
calculate the
paste the
denominator.
formula in the chat box?
Okay. Value of the form.
-0.0345. It's 0.06.
You hardly understand anything like from this. There's actually a It is actually operating free cash flow divided by K minus G. K in this case is, so the denominator you got is 0.0675. What is 0.0675?
Yes.
Denominator. So now you calculate intrinsic value is equal to 439 divided by denominator 0.0675. Tell me what is the intrinsic value now?
6503.70.
So total intrinsic value of this firm is 6503.70.
03.70.
Okay. Now I need to know this on a per share basis, because this is on a overall basis. I need to know on a per share basis. So Rakesh, can you find out how many shares are outstanding? You need to go through your own
Outstanding market cap divided by book value, right? Market cap 28 divided by book value.
market cap divided by current price. 2898
Sorry,
2898 divided by 16.10.
180.
How much?
180.
180.
So 180 crore shares are outstanding. Remember, these values are in crores. So now intrinsic value per share is equal to your intrinsic value is how much we calculated?
6503.
6503 point.
Divided by 180.
Let's don't take 6504. Let's take 6504 only. 6504 divided by 180. Now how much is this? Intrinsic value per share is very important.
36.13.
36.13.
113.
So intrinsic value per share is 36.13. See, this is very different from our earlier intrinsic value of 17 points. Remember? See how much difference. See how much difference there is between the two methods. So intrinsic value per share, now you need to divide by half for margin of safety. Margin of safety price is equal to intrinsic value per share of free cash flow divided by 2. What should be the price? What should be? Now you give me the 36.13 divided by 2, it should be.
18.065.
18.07 you take. Okay.
Oh, yeah.
So 18.07. Now your current price is less than 18.07. So it actually meets the criteria of NBCC. It satisfies the criteria.
Right?
Yes. The other one failed. Other one failed, but this one agrees.
Yes.
So now you need to know which is better. Now you need to, as an investor, you need to judge which is a better method of evaluation. Better method of evaluation. Hello.
Yeah, follow you. OFCF.
Free cash flow or dividend discount. Let's see. Because we need to, because one criteria is meeting, other criteria is not meeting. As an investor, we need to judge which is better.
So free cash flow is better, right?
Let's see. So free cash flow method is better. method meets the free cash flow, so we can invest in this company. And now I have a homework for both of you, since two of you are here. So I have a homework for both of you. We before we meet on we meet on Sunday evening at 8 o'clock. I need you all to find out NVCC we already have. That is, see what is the second highest? GTL Infra. So GTL Infra, homework for both of you. GTL Infra, I need intrinsic value calculation with both the methods. So, Gagandeep, I think.
Noted, Shobhajit.
Yeah.
Yeah, Shubhajit. Yeah.
If you set up a free account on screener.in, you will have this kind of you'll have a free account there. So you go by company search. Whenever you set up a free account in screener.in, the website name is screener.
.in. It's written over there, screener.in.
So set up free account there, and you go to the company wide screener.
Which company?
It is company's called GTL Infrastructure. GTL Infra.
Okay, fine.
So you need to calculate both these methods, because intrinsic value, remember, is the most important calculation any value investor needs to do. Because if we don't know intrinsic value, on what will we base the margin of safety? Margin of safety is half of intrinsic value. So obviously we need to know what is intrinsic value to know. So my homework for both of you is to find out what is intrinsic value with both the methods. So both free cash flow method and
Dividend
discount method. And Gaganpreet, you missed the first part of the session. I'll be recording the full thing and I'll be sending it to the group. You find from there what is the dividend discount method in detail. All right.
No problem.
Sunday when we meet again, we will we'll discuss for another company. Before I move to Warren Buffett, I need hands-on experience for calculating intrinsic value per share, because we will not appreciate Warren Buffett till we do this exercise ourselves for at least 2 or 3 companies. Is it okay?
Yeah.
All right, then. So we are done with our intrinsic value, and we are done with our session. So Sunday 8 o'clock we meet, and we, till that time you have the time to calculate intrinsic value. Remember, Gaganpreet, you were not there earlier. You need to get all these inputs first before you can calculate. You need to have all these inputs first. Rakesh, can you calculate can you put the formula which we calculated for last one?
I think I have Excel file, Shobhajit. I'm saying that because whatever calculated we have, I recorded an Excel file, so that will help him for sure, definitely.
Okay.
Is that fine, Gaganpreet?
Yeah.
So this is the formula.
Excel file in that part.
This is the formula.
Which one?
Dividend. this one, expected dividend per share. So expected dividend per share is equal to your current dividend per share into your growth rate of dividend. And we took growth rate to be equivalent to 10%, because we want minimum 10% growth in dividend for us to hold the stock. So whatever is your dividend per share, your numerator should be enhanced by 10% of that. So dividend per share into 1.1.
Okay.
Into 1.1. And denominator, working weighted average cost of capital, that is a big story in itself. In fact, half an hour we spent only on calculating what is weighted average cost per cost of capital.
Mm-hmm.
That's cost of equity, correct? But every time it is not zero. I don't know how to calculate this because copy pasting it comes. This is the one. Gaganpreet, kindly note this formula because this is in the chat box.
No, I'm writing it. I'm writing it.
Yeah, cost of equity into equity by debt plus equity, and cost of debt is not every time the debt will be zero. In this case, the formula was simple because debt was zero, but every time it.
Okay.
So you need to first calculate weighted average capital, then only you can use this formula. Only this formula, expected dividend share minus WACC minus growth. Unless you have WACC, you cannot have the denominator. So first you need to calculate WACC. Numerator is very easy. You multiply numerator dividend into 1.1. Growth rate is very easy because we have taken 10% growth rate. Below that, we are not satisfied. So that will be your WACC minus minus growth rate.
Yeah.
So WACC minus growth rate is whatever is the denominator you get. That is your denominator, and numerator. So whatever is the total intrinsic value per share, remember that is intrinsic value. Now for intrinsic value per share we need to divide by intrinsic value divided by shares outstanding, and for shares outstanding is equal to market capital divided by current price.
Okay.
180 crore, remember?
Yeah. Market cap, right?
Yeah.
Actually, then intrinsic value per share. I will try actually. This is very first time I am attending this one. Sunday one. I will try.
Definitely. This actually, if you attend, if you catch up with the initial few lectures, initial few sessions, we were only calculating. We were doing the basic concepts of value investing. We only moved into calculation after we understood the basic tenets of value investing. All right. Right then. So for now, good night. We meet on Sunday again. Okay.
Sure. Good night.
So,
Thank you. Okay.
Yeah, Rakesh, you send the Excel or note file to the WhatsApp group as well. Okay.
Sure. Today's calculation I'll send in the group.
Okay.
It will be a little messy, but it is very useful. I have recorded everything.
Okay, great.
Yeah. Thank you so much. Thank you for the session. Yeah. Bye, Good night.
Thank you, Shubhajit. Bye bye.
Thanks.
Good night.
Thanks.